Hello, investors, and welcome to AI Insights US Stocks. I'm your chief AI analyst. Just a quick reminder, this show is for educational purposes only and is not investment advice. Investing always involves risk, so please trade with caution. Today is December 1st, 2025, and in the next few minutes, we're going to break down everything you need to know, because the market is facing a serious triple threat this week: critical tech earnings, a flood of economic data, and a huge speech from the Fed.
So here's the big question on everyone's mind. We just came off an absolutely fantastic November, but can that momentum survive this week? I mean, are we about to launch into that classic Santa Claus rally we all hope for? Or are we about to get a cold, hard reality check before the year is out?
All right, here's how we're going to break it all down for you today. First, we're going to run through tech's big earnings gauntlet. Then we'll dive into the Great Data Catchup. After that, it's all about decoding the Fed. And finally, we'll pull it all together for your weekly outlook. Okay, let's jump right into section 1, tech's earnings gauntlet. This is basically the grand finale of the third quarter earnings season. And you better believe the spotlight is shining directly on AI and cloud stocks. Seriously, their results could set the entire tone for the rest of the month. Take a look at this timeline. You can see just how front-loaded this week is. I mean, it kicks off with a massive bang on Monday. You've got Salesforce, CrowdStrike, and Snowflake all reporting. Then Tuesday brings DocuSign and Okta. And get this, the options market is pricing in some huge swings for these stocks. That's Wall Street telling us to buckle up because volatility is coming. But these reports are so much bigger than just a single stock. Think of them as a real-time health check for the economy. We're watching to see if all this AI hype is actually turning into cold, hard revenue. We're looking at cloud computing to see if big companies are still spending freely, because that tells us a ton about business confidence. And we'll even get our first real numbers on Black Friday spending from retailers like Kroger and Ulta to see how the consumer is holding up. And that brings us right back to that huge AI theme. This quote from Seeking Alpha really nails the narrative, suggesting CrowdStrike could get a big boost from AI-driven demand. This is exactly the kind of story the market wants to see confirmed when they report on Monday. The billion-dollar question is, will the numbers back it up? Okay, now let's zoom out from individual companies to the big picture with Section 2, the Great Data Catchup. Thanks to some earlier delays, we've got this huge logjam of economic reports all getting released this week. It is going to be a fire hose of information, with inflation right at the center of it all. Take a look at this chart of the key releases. We'll get a read on manufacturing Monday, then private payrolls on Wednesday, which is kind of like the opening act for the big jobs report. But as important as all these pieces are, the real headliner, the one that towers over everything else, drops on Friday. And here it is, 2.9%. Now, you might be thinking, wait a second, this is for September? Why do we care about a 2-month-old number? Well, here's why it is a huge deal. This is core PCE inflation, and it is literally the Federal Reserve's favorite, most watched measure of inflation. This is the number for them. And that brings us to what's really on the line for the market. A number that comes in hotter than expected could be a total game changer. Right now, the market is pricing in about a 65% chance of a Fed rate cut. If this inflation print is hot, you can watch that probability just evaporate. And it could unwind a big piece of this recent rally with it. Which, of course, leads us perfectly into our third section, decoding the Fed. Because after the market digests all the earnings and all that data, all eyes are going to turn to one man to make sense of it all: Fed Chairman Jerome Powell. He's speaking this week, and investors will be dissecting every single word he says. You can think of Powell's speech at Stanford as a kind of tug-of-war between two stories. On one side, the bulls are desperate for dovish signals, any hint that they're done hiking rates or that inflation is on a clear path down. On the other side, the bears are listening for any hawkish risk, warnings about keeping rates higher for longer, or worries that the economy is still too strong. His tone could easily be the week's biggest catalyst. And this quote from a Chase report just hits the nail on the head. They're saying, yeah, a rate cut could happen in December, but it all depends on the data. This just reinforces how tightly woven all of these events are. Powell's speech and that inflation report are completely intertwined. So let's bring it all home in our final section, your weekly outlook. We've talked about the companies, the economy, and the Fed. So what's the bottom line for you as an investor heading into the first week of December? Let's boil it down to 4 key takeaways. First, this is an incredibly high-stakes start to the month. Everything is happening at once. Second, tech is the ultimate bellwether right now.
Strong earnings could add fuel to this rally, but weak numbers could douse the flames fast. Third, Friday's PCE report is pivotal. It's the checkpoint that will either confirm the market's hopes for a dovish Fed or shatter them. And finally, while December is historically a great month for stocks, let's be clear. This year, the data holds absolute veto power over any historical trend.
So it all really comes down to this. With the stage set by these tech giants and that critical inflation data, is Jerome Powell going to play Santa Claus, or is he going to be the Grinch for the markets this holiday season? That's the question. A quick takeaway? The market's fate for the rest of the year really hangs in the balance this week. Drop your thoughts in the comments. I'd love to hear them. See you in the next episode.